Well, while the frontline index has been sluggish, it's the mid-cap and small caps that are hitting record high levels, and select names from that are actually doing much better than rest of the market. Case in point being Trent, and if you pull up the YTD chart, you'll see that stock continues to soar. Yes, the naysayers have been pointing out how the PE valuation continues to be about 100 times, but then there are likes of Saurabh Mukherjee, etc., who believe that the valuation is not the best metric to look at it, given the kind of growth that we are envisaging and how the Zudio business is panning out. In fact, my colleague Vamakshi did a deep dive into this stock to kind of understand how is this stock stacked versus rest of the peers across the globe as well. What are the levers for the company? Let's go across to Vamakshi to find out more.
Well, yes, Trent is the most expensively valued retail stock, not only in India but globally. The company has a 12-month forward price to earnings ratio of 106.48 times, and in fact it has managed to surge over 90% on a year-to-date basis, making it one of the best performing retail stocks globally. Now let's also understand the reasons behind this significant re-rating that we've seen in this counter over the last few years. The company has managed to report an exceptional performance, especially in the wake of weak demand environment. They managed to post a very strong, robust same-store sales growth and have managed to expand their retail footprint. Zudio especially has played a very important role. In fact, the company managed to achieve a revenue per square foot of approximately 16,300, which is double the industry average. Notably, it is the only retailer to deliver strong profitable growth within the value retail segment. Overall, when we look at the company's fundamentals as well, they have been improving at a much faster pace than what the market was anticipating, and this in turn has to some extent led to the company's elevated valuations. Going forward, the fashion business is expected to drive growth for the company, especially Zudio. However, analysts caution that the aggressive entry of some of the national retailers could prove to be a challenge for Zudio. Apart from that, Trent's grocery segment, that is Star, represents a significant growth opportunity, but analysts believe that the need for capital in order to scale Star's business could pose a challenge and could remain a potential overhang on Trent's balance sheet. Overall, Trent has continued to defy market trends. The valuation is definitely elevated, but it will be interesting to see whether the company can sustain its impressive growth trajectory ahead.
Thanks very much, Vamakshi, for giving us those details on Trent and just looking at the overall picture about valuations.